We are live on YouTube. Hopefully everything looks good. Usually the YouTube quality is a little bit better than the virtual trading floor quality for these afternoon meetings. Today is Wednesday? It's Wednesday, right? Yeah, wow. Wednesday, May 10th. And I am an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All trades placed by me are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure, I got stopped at a KRE at yesterday's low, which is pretty much the low of the day today, so that stinks. Don't have that one anymore. And I'm not in Airbnb. Just kind of day traded that a little bit after the close yesterday, and then a little bit more today, but nothing really to write home about. I think I finished probably down very small between yesterday and today's Airbnb trading. Let's go to some charts. Let's talk about today. Today was a crazy day. We only ended up 0.5% in the SPYs. I say only because we were up a lot more at one point pre-market today. The Qs, a decent 1.2%. The real disappointment, in my opinion, is the Russell, which closed up 0.62%. You would think that sounds pretty good, and it doesn't sound terrible when I say it out loud, but at one point we were up huge pre-market in the Russell. It was the clear leader. We were above key levels, including the key 176 level for the Russell, and then failed all the way down, went negative at one point. I mean, today was nuts. Let's take a look at it. Let's have a little bit of a recap. So, pull up this chart of the SPYs. Let me bring back the pre-market charting here. You can see the CPI number came out at 8:30, and we absolutely exploded like a rocket ship. It was sick, really big move, starting from like this 410.50 area, and by 10 after 9, so 40 minutes later. So 40 minutes later, you know, it's a big move in a short period of time, to go up from 410 to a high here of just about 415. But at the same time, it was done over 40 minutes. So it wasn't like a quick, 1 minute flash up like you sometimes see in a news event or a Fed meeting or something like that, where the market is a quick flash in one direction and then goes the other way. This was a sustained move over the course of 40 minutes, and it was massive. And when we opened up, we sold off and never got anywhere near those pre-market highs. Really the rest of the day with the SPYs. Qs got a little bit closer, and same thing with the IWM. The IWM never really got close. But it was incredibly a really big move. And to recap the CPI came in entirely in line with the exception of the headline number. Month over month was in line. Core month over month was in line. The core number in general was in line. The headline inflation number, expectations were for 5%. The range of expectations was like 4.9% to 5.1%. 5.1% I felt would have been a concern, meaning the upper end of the range, or even worse would be higher than the upper end of the range. Because at 5.1% or higher, you actually would have had an uptick in that inflation number compared to our last report. And I think that just looks really bad from a headline perspective. Instead, we actually had the opposite. Coming in at 4.9%, I actually felt that would do a lot of psychological good for the market to see a number coming in under 5%. It's still within that range, so more or less these numbers were entirely at expectations. And, when you're dealing with the market perfectly meeting expectations, what you usually end up with is a lot of nothing, right? We saw that most recently with like the Fed initially, when the Fed increased by 25 basis points. What was that, a week ago? And then signaled they basically perfectly met expectations. And if you remember, between 2 and 2:30, until Jerome Powell said something that the market eventually didn't like in the press conference, between 2 and 2:30, the market just gave a lot of volatility and did nothing. So that's usually what you have happen on events that everyone is watching but perfectly meet expectations. A lot of volatility leading to nothing. And at the end of the day, if you look at the SPYs, we kind of had a lot of volatility leading to nothing. My thought process, though, was a little bit more bullish in the morning meeting than what the market gave. I thought that from a psychological perspective, coming in at that 4.9%, hitting that 4 point something number, even if it was within the realm of expectations, and it also not having that negative thought process that a lot of people seem to be talking about an actual uptick in inflation, could just be a environment for the market where a sigh of relief is kind of breathed and the market works its way back up. We're continuing to move down with inflation. People who are making the stagflation argument, well, that argument is still, you kind of have, one less, I don't know what the expression is I'm looking for. There's like a hat expression, right? One less peg to put your hat on. I don't know what the expression is. But the people who are, in the stagflation camp, I think have, one less little argument or one less piece of data to be able to, the inflation number does continue to, slowly come down, yet the economy is still in good shape. So to me, I really thought it'd be a Goldilocks situation, work its way higher. And again, we did close positive. I got the SPYs up 0.5% on the day, but I was thinking that this could be such a big move where we clear within this range. We've had a lot of volatility within this range since the earnings season has begun, but overall it has completely led nowhere. And on the intraday, if we want to take a look at that real quick, you can really see that volatility. I already took off the pre-market, but the pre-market had that huge rip higher. By the time the market opened, we sold off hard and sold off fast. So luckily, or maybe not luckily, I would actually attribute this to a degree of skill. We know how to handle markets that are extended via gaps. It's one thing that I felt super bullish in the morning meeting, that I had a bullish thesis on this market, that I really thought we could break out and continue. It would be something completely different if I took that thesis and I started just buying the heck out of the market in the first 5 minutes because I was like, oh boy, the market's going up. I'm right. Buy, 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 buy. That's not good trading. That's not how I trade. That's not my edge in the market. My edge in the market is to have specific trading setups come in where I can position myself based on rules and I can create consistency where I can have strong risk reward and probability of success with what I'm doing. And part of that rule set is when you're dealing with a large gap to be careful trading in the direction of that large gap. Unless it's a breakaway gap, which is a very specific type of gap where the market's gapping above resistance. But this was not a breakaway gap. The IWM, and I'll go back to the SPYs in a second, was almost a breakaway gap, potentially. If the Russell could have opened above 176, it'd be opening up above a resistance level. That's a potential breakaway gap. Potential breakaway gaps have a higher probability of giving continuation in the direction of the move, because when you gap above a resistance level, you have a higher probability of a big short squeeze actually coming into the market. And that's what creates that dynamic of a gap and go situation. But that's not what this was. If anything, this was the opposite. This was a gap into resistance, a common gap into resistance. Common gaps into resistance tend to fill. They tend to do exactly what this market did, which is actually fill that gap. But when you're looking at and this is where probability comes in, and this is why you should never just memorize what chart patterns look like and think that you can be a billion-dollar trader because you know what a bull flag looks like. It's never as simple as just memorizing things. You need to understand all the nuances around the specific situation that you happen to be looking at that given point in time, and all of the layers of probability that will actually impact whether or not the market can go or not. So this was a news event, but it was still a common gap into resistance. A common gap into resistance says you should fail, but then lower probability that will fail, and a little bit of a higher probability that you could actually get continuation off of it. But what do we want to see? We want to see in the beginning of the day the market confirm the gap. How does the market confirm the gap? You need to see how the upside extension that's created from that gap gets satisfied. How do we measure extension, or how do I measure extension in the market? Is where a stock or a market is trading versus the space between the 8 and 21 EMA. And that applies on all time frames. And that's why I was saying, actually, one of the things I felt was on the side of the market giving continuation, I think maybe Cody brought it up in the morning meeting, was that we don't have any daily chart extension. I remember mentioning in the morning meeting today that the S&P, as represented by the SPY, would not be extended to the upside by the way I measure extension in the SPYs until we get to like 421. That's where you would start to see about $10 worth of extension from the EDMA on the daily chart. The EDMA on the daily chart right now is at 411.37. Obviously, that'll continue to move higher as the market moves higher, but show me a market that's at 421 in the SPYs, and I'll go, ooh, this market's way too extended. We can't buy it, and we should look the other way based off of that extension. So you had no daily chart extension whatsoever coming into this number, which means that there's even a higher probability that we could have gone higher because of that. But the gap was big enough, because these concepts apply in every time frame. The gap was big enough here where we had extension to the upside on this 5-minute chart. So I want to see in the beginning of the day the market give me confirmation that we're holding this gap, that buyers really are coming in to support this news after the market actually opens. And what I need to see is, what does the market look like when the price action is first getting to near where the ADMA is? And there's a few different things that could happen on this type of event. One thing that could happen is that a market that's already extended via the gap could just get incredible upside momentum and just could go and go and go and go. That's a lower probability situation, especially when you're talking about on the market as a whole, where you get a market that's extended, it becomes even more extended. How does a market that's extended become even more extended for our situation 1 here, where we just were to gap and go right away at the open? Momentum. When will you get momentum? You get it on news. So it could have happened today. It could also be technically based if you had a breakaway gap, but like we just discussed, we didn't have a breakaway gap. So that's one thing that could happen. What happen is that the market could go sideways. We discussed this a lot in detail with the earnings reports of Meta and Microsoft when they had really big gap ups because of those news events. And then they took, 30 minutes, an hour even, for small time frame equilibrium to catch up before you could get continuation. And what that basically becomes is a bull flag. So you get this big gap up, some profit takers are coming in, that's creating selling, some new buyers are coming in because they're shorts that are getting squeezed, or because they're new buyers coming in based off the news, whatever it is. They kind of create a price equilibrium where you go sideways here for about 30 minutes. That ADMA would begin to catch up. Once that ADMA catches up to the base of price action, that usually brings in a new wave of buying. That new wave of buying creates the breakout of that intraday resistance, and you get continuation. In my opinion, that's the most healthy way to get continuation of this sort of news gap or news event. Situation number 3. The market wants to go sideways, but it's struggling a little bit. There's some selling pressure. You get a little bit of a technical pullback as well, but it's not momentum selling. That's situation 4, which is what actually happened today. It's not heavy opening momentum selling. It's the market kind of digesting through time and price. The ADMA catches up. In an ideal situation, you get like a hammer candlestick into the ADMA that could be something that you could look to execute to the long side. And then eventually new highs come in and you get that same continuation, similar to situation number 2 that I'm describing. Situation number 4 is basically what we got. Opening momentum selling. In this case, the SPYs tried to hold in for 5 minutes. The IWM didn't even try to do that. The Qs, because of that strength, also were trying to hold in the beginning of the day. But this isn't just like the market price correcting down. This is like heavy, vicious selling from the second the market opens almost. This is momentum selling. Look how big and wide these price correction bars are. That's the worst thing that you want to see in the beginning of the day. It's not impossible for you to get momentum selling into equilibrium, get a pivot that leads to then new highs and some sort of intraday V bottom off of that equilibrium zone. It's not impossible. But you're looking at a much lower probability situation now that the market can actually make new highs and actually give continuation. Because otherwise the sellers wouldn't have been able to be that aggressive. If there were enough buyers out there that you're going to be able to get that pivot off of equilibrium that's going to lead to new highs, then the selling is not going to be this aggressive to begin with. What we had to create this downside momentum is aggressive sellers and no buyers showing up to the plate. And that just becomes something very hard to buy. And that was the initial warning signal. So again, I came into today with a very bullish thesis. I really thought we could break out in the market off the CPI. I guess I overread it. I was over bullish. I was wrong. But I didn't lose any money by being wrong because I have a specific rule set that I'm following, where I understand I'm wrong all the time. It's the nature of the business to be wrong regularly. But what a good trader can do is wait for that market price action to confirm that their thesis is actually correct, and that can enable you to be wrong and not lose any money. So, you know, I was being patient off the open as per my game plan because the gap was so big. The IWM being weak first is always a problem. I wanted us to get back above 176 right away. We never even ticked above it. Then I was like, all right, well, worst case here, we pull back and we hold the 175 area. We know that 175 area is also important because like this high here is 174.45. This high from a couple days ago is like 175.55. Roughly this 175 area. 176 is really key. But, you know, if we price correct, some catch up because the IWM gapped up on a much higher percentage as the Qs, and there's just a little bit of mean reversion happening here with some opening IWM selling, Qs catching up a little bit, but the IWM with all that still. Once this fourth bar came in, and we broke this low, and we couldn't get back above 175, and the SPYs were still selling, and XLE was getting completely smoked, and XLF was also you know, going from green to red. It was just off the table. You know, we could still look for relative strength. We could still look for relative strength in mega cap tech, but the market was telling me that my thesis, which was this CPI could lead to a breakout of key levels for the market, which could be led by the KRE, led by the IWM, and create broader market participation. The market told me that that idea was wrong for sure by 9:45. And the best part was, again, I wasn't aggressively buying off the open because I'm following my rule set and I'm not getting hurt by that. It doesn't mean I'm not disappointed. Certainly disappointed. And I had a couple decent little trades. I actually called out and bought the IWM pretty much at this low. Not with a lot of size. Not with a lot of size because I knew that the reward profile was limited. I knew that the probability of a new high coming in is low. So I'm like, all right, I got 1, 2, 3, 4, I got 5 vicious red bars in a row in the IWM into equilibrium. I'm going to come in and look for a bounce in the market because it should give it. Came in, I bought some IWM via TNA. I really just wanted to move back to like about 175. I completely liquidated that TNA position by I sold 29.74 is where I got out after buying like in the 30s and 40s in it. Just a quick little kind of day trade, then out of the way. The new lows continued to come in the IWM. SPYs actually gave a really strong bounce along with the Qs at that time. Qs were even able to make new highs. So really, when the Qs are making new highs, you're getting completely different pieces of information based on the price corrections a little bit deeper than you want, but it just pegs the ADMA, begins to bounce. You get an inside bar. You almost got 2 inside bars in a row. That breaks up and leads to new highs off the ADMA. You're looking at the Qs here at 10 a.m. Things are looking great. But guess what? Your IWM is not giving you that confirmation at all. And when we don't have IWM confirmation, it's a warning signal. So yeah, and I think I even mentioned at one point when I was on the radio, when the market was, I should be happy, but I'm not. I'm not happy because if the IWM's not participating, it means I'm not going to get broader market participation. It means I can't trust any potential breakouts that are coming in the Qs or the SPYs or anything else. And that proved to be the correct thought process also. As the IWM eventually made new lows, the SPY made new lows, and you know, we had a ton of volatility here intraday, but at that point, I kind of threw in the towel. I didn't want to short this market. You know, the short was probably too late. You had to be super aggressive and kind of short the gap up to feel confident with that. And I'm still broadly bullish on things, to be honest. I didn't want to short the market, but I had no reason to come in and do any real buying outside of a couple tactical cash flow trades and you know, position management on swing positions that I'm kind of already involved in. Dropped super quick. Yeah, so I don't know how much I was talking there before I realized that I lost you guys there for about a minute. I can hear that keyboard. But yeah, this was just the other trade I took at pretty much at lows when we were starting to go parabolic to the downside. I started buying some TNA again. But this was also just for a snapback trade. I was all out by 29. I was all out by 29. I did not capture the rest of this because I couldn't trust the market. It was just a little cash flow trade. And that's pretty much it. You know, going back over to the daily chart for the market, there's nothing really new here to talk about. A wild day, but totally within range. No major breakout. The Qs still look fantastic, but that's because leadership is 7 stocks. And the IWM honestly didn't really make any progress. I need this IWM to clear above some key levels. I got stopped out of my KRE, if I can get that chart to show up. Stop was at yesterday's low off of the swing trade that I had. So I got ticked out by barely anything. You know, we made new lows in the carry by 5 cents. So I got pushed out of that. But the market just didn't confirm my thesis. So I got to follow my rules and my risk management, and that's pretty much it. So I finished up a decent amount of money today, but I'm not happy about it, to be honest, because I had big expectations for the market. My thesis and my thought process turned out to be totally wrong, but by following the rules set I was still able to make money. So that's all I got for you guys. Sorry about that quick drop off there with my computer. I'm going to be getting a new computer as soon as I get back to New York. I just can't order it to here because I'm about to leave, and I'm probably going to be on the road for a little bit. Though my microwave blew up this morning, so now I'm stuck here fixing that. I got to fix something with the car also. Anyway, happy to answer any questions anybody has. Scrolling up in the VTF. Doesn't look like I missed anything. Yeah, the PayPal move here is getting crazy. Yeah, it's sick. New lows going back to, what'd you say, 2017? Impressive. From Kyle. So on the pivot this morning at 9:50, when looking back, I noticed the Qs had given a super tight inside 5. In this case, would it have been fine to trade the index here, the TQQ for a pivot bounce? Yeah, I don't like how the inside 5 broke down, so I don't think that you can actually trade this inside 5 because the inside 5 actually broke down. If you're going long here, you're really going long off the pivot. So it's just like a pivot off of equilibrium trade more than it is an inside 5 and up. Or would it be better to go with a name that was relatively strong like Amazon or Google? You could do either. We called out Google at this time. I think Rex was in this trade. It was a good trade off this low here at 950 that I called out in conjunction with what the market was doing at that time, because Amazon was acting super relatively strong and it was basically building a bull flag here, and the ADMA had just caught up to it, so that's when you should get continuation on a strong name. So I like the idea of going after stocks a little bit more often than the indices. It's what I generally prefer to trade, even though I do both, because you can add in that extra layer of probability of this Amazon relative strength, like what happened there. Again, and I don't think the TQQ inside 5 itself, or the QQQ inside 5 itself, is actually tradable because it broke down. I think you have to trade it off the pivot. Yep. What else, guys? If there's any questions on the YouTube, if somebody could copy and paste that into the VTF, I'm afraid to bring up YouTube on one of my browsers just because my computer's been acting so poor. I don't want to slow it down any further. I'll take a sip of my tea. Give you guys a minute to post any questions. I gotta keep this head cold. Anybody? Anything? A lot of action today, so I'm happy to answer any questions, but I'm also happy to wrap it up early because I'm a little under the weather. Okay, I wonder if I lost the YouTube stream when my internet did that weird thing there for a minute. Maybe I did, maybe I didn't. All right, well, oh, we've got the Redler thing today, don't we? All right, well, Redler is doing his thing, so we should tune over to that. Have a great night, everybody. Speak to you then.